Ethereum. I've got some crazy on-chain data to share with you that is showing like there's some crazy things happening with Ethereum. The potential next cycle for massive price appreciation for the Ethereum asset, I think, is very strong considering the fundamental realities that we're starting to see on chain, as well as what the layer 2 scene is adding to the Ethereum ecosystem. So let's talk about it. But first, I want to take a quick look here at an Ethereum chart. So Ethereum, if we go all the way back to June 2022, Ethereum has basically been forming up a giant ascending triangle. Of course, that's from first connection point around 870, back up to $2,000, back down to $1,000, back up to a little over $2,000, a little bit of a breakout above that line, but it did not hold. It was a fake out. Few tests on that line again on the first week of May, mid-July, trying to break over $2,000, but not succeeding before coming back down and retesting the line around $1,550. Massive ascending triangle forming up here. Price target breakout of that, of course, if we break to the upside, is like $3,200. That's pretty interesting. The end date for that triangle, by the way, is March next year. So imagine if the price just ranged inside this triangle between now and then. Then we see Bitcoin ETFs approved. Then we see Ethereum ETFs get filed. Then we have the Bitcoin halving. Everything takes off, gets all exciting again. That's how it happens in markets. That being said, the MACD currently under a bearish crossover heading lower. So we'll see if this triangle pattern can hold or not. RSI is looking pretty middle of the road right now as well, so that's not giving us a lot of indication. But as long as we keep putting in these higher lows for Ethereum, we continue forward. Now, let me share some crazy numbers here. Crazy numbers. So Ethereum's 2.0 deposit contract just reached an all-time high of 28.1 million ETH. That's nuts. That's nuts. 28 million ETH are currently sitting in the Ethereum staking deposit contract. We're probably up to around 2.5 years right now. So if everybody wanted to unstake their Ethereum, it would probably take around at least 2 years. I'm just back of the napkin math here real quick. It would take at least 2 years to get all that ETH out, potentially more. That means a gigantic amount of the total ETH supply is not going to be able to be dumped in the markets instantly. It'll take a long time to unlock all that ETH. And it keeps going up. More and more people keep staking. It also makes me think, of course, about the realities of when the market is starting to peak, when ETH gets up to 10K, for example. Well, what starts happening then? Everybody starts running for the exits, but they can't get out. What's that do then to the price of liquid staked coins? People rushing to get out, taking any price they can. They want to rather get out. They'd rather take a 10% loss on their STETH or their RETH or their CETH, whatever. Coinbase Ethereum, Rocket Pool Ethereum, Lido Ethereum, whatever it might be. They'd rather take a 10% loss on that versus riding things down 70%. So this is something to think about if you're an Ethereum staker, is what is your exit plan during the bull run? How will you get out? Will you manage to get out on time? If you're staking directly, it's going to be more problematic. If you are staking via a staking provider like Lido or Rocket Pool or whatever, what's going to be the reality of that? Will there be a loss taken because so many people are trying to get out of those proxy tokens? I don't know how it's going to play out, but it's certainly interesting. Remember, of course, if you do see proxy tokens depegging, that they're still worth 1 Ethereum, regardless what they're trading for on the market at the time. Anyway, I digress, but it's just a bit of a thought that I have been having about Ethereum staking during the bull run. Regardless, though, it's, I think, a massively bullish metric to see over 28 million ETH in the staking contract. It's probably going to be 30 million ETH by the end of next month. Huge percentage of the supply getting locked away. What happens if we get up to like 40 or 50% of the total supply of Ethereum locked into the damn staking contract? That builds massive moon math here, because that means that 40 to 50% of the supply cannot be dumped on the market overnight. There's a queue to get out, and the queue now is 2 years long, and it's just going to keep getting longer the more people stake their Ethereum. Crazy stuff. And at the same time that we have that, the balance on exchanges just reached a 5-year low at 14.7 million Ethereum. That number has been steadily going down for years. In fact, it's now dropped by 50% since the COVID crash. We had a peak supply on exchanges. Since then, we've gone from 32 million down to 14.7 million ETH on exchanges. Yikes. That's crazy. So what you're telling me is that we're seeing huge amounts of ETH ripped off of exchanges. Huge amounts of ETH going into the staking contract. Again, this is rocket fuel stuff here. This is on-chain rocket fuel data that we're talking about. This is how we see a supply-side crisis come forward for Ethereum, and we see price spikes during the peak of the bull cycle up to 10K potentially, because more and more ETH is going to be taken off exchanges, thrown into the staking contract by people who probably aren't even thinking about, how do I get my ETH out of here at some point? No, they're just chasing the yield. And look, if you have a multi-year time frame on chasing that yield on Ethereum, and you're just taking that ETH and you're looking at like a dividend stock or something like this, I'm going to buy ETH, stake ETH. I'm not going to think about it for 10 years. Great. That's probably a pretty good attitude to have towards it. Because if you're especially running your own staking node and you're trying to get out at the top of the peak, just keep in mind, it might take a while. And before we dive into the other Ethereum stats here for you, I just want to let you know that if you're not signed up to the Wealth Mastery newsletter yet, you got to check it out. It is the best damn newsletter in crypto. Every single issue is absolutely jam-packed full of alpha on altcoins, on the broader market. We cover news. We cover altcoin. So we do regular reviews. For example, we just did a review. Shout out to Jesse. Did an awesome review of the top 5 altcoin gems incubated by BINANCE Labs. Very interesting report, that one. So check it out. We talk about DeFi and NFTs, technical analysis, all straight to your inbox 3 times a week. It helps keep you up to date on what's happening in these markets. So check it out. You, of course, use the link in the description to sign up, or you can go to thewealthmastery.io. That's thewealthmastery.io. Now, let's talk about OF and Ethereum. So the owner of OnlyFans invested about $20 million of the company's money into Ethereum. They did that last year. Their holdings down like 30% or something like that. I guess they decided, hey, all of our creators are getting screwed all the time. We might as well buy some Ethereum and get screwed too. No, so I think that's funny. Anyway, besides the point. Besides the point, it's a non-story. Great for them for buying Ethereum, of course. One potential thing to keep an eye out for, though, is that FTX may be liquidating its $3 billion cryptocurrency stash. Apparently, they've reached out to Mike Novogratz's Galaxy Digital to potentially help them with those liquidations. They have $1.5 billion worth of Solana, $40 million of Bitcoin, $150 million worth of Ethereum, $60 million worth of Dogecoin. Now, obviously, they're not just going to market sell that on exchanges. They're going to try and get the best price for it. They're going to talk to OTC desks. They're going to talk to whales. They're going to talk to other institutions. That Bitcoin's probably going to go straight in the hands of BlackRock, et cetera, et cetera, et cetera. So, most of this is probably not that concerning. Although, where are they going to find $1.5 billion of the buyers for Sol? I don't know. That's interesting. And look, we covered Solana the other day. I think Solana's been doing a lot of great stuff recently, and it's definitely worth paying attention to. Again, I'm paying attention to Solana. Again, I don't have a bag, but I am paying attention to what's going on that network, because it's a big and important network and has potential next market cycle to do some interesting things. But that could be a short-term buying opportunity, let's say. Also want to share this one from Il Crypto Prof here. Altcoins broke out of a falling wedge that's been in place for almost 2.5 years. They're currently in the back test phase. So this is looking at the total cryptocurrency market cap, excluding Bitcoin. Interesting to see if that back test holds, because that's a technically bullish sign. When we have this initial breakout, comes back down, does the retest, and then potentially moves higher. That may take a while, right? This is the 1 week chart here. Could take a while for that to play out before we get any kind of serious movement in the altcoin space. But it comes quick when it comes. Let's just keep that in mind. And now in terms of other Ethereum demand, it's layer 2s, baby. And layer 2s have been popping off like crazy, man. We've seen, for example, Coinbase's base see a huge influx of users. In fact, it was the fastest layer 2 to get to 100,000 users. Very impressive. Obviously, Coinbase has a huge user base. Lots of people are excited about Coinbase's base chain, so it's understandable. Also, they've announced that they are deepening their collaboration with Optimism, which of course is what the base chain is built on. It's built on the Optimism stack of technology. So good for Optimism, good for base. Very interesting, of course, that all of this requires Ethereum. Everything happening on base requires Ethereum to pay for gas fees. That means more demand for ETH. The more layer 2s succeed, the more demand there is for Ethereum. It's just that simple. Almost 30 million into the staking contract. Supply and exchanges keeps plummeting. Demand from layer 2s keeps rising. I mean, I'm not a math doctor, but I'm pretty sure all that equals M-O-O-N. M-O-O-N. That spells moon. ZK Sync also. This is one I've been farming, well, playing around with, we shall say, quite a bit. On-chain activity has continued to increase. 100 million total transactions for the first time in its history, but that's not the limit of the activity. Pretty interesting. Pretty interesting to see all of that taking place there. Huge demand for layer 2 networks and a lot of people coming in using them. Also, a quick announcement for any Chainlink holders. Chainlink Staking V2 is on track to launch in Q4 of this year. Pool expanding out from, I think, about 25 million link currently up to around 45 million link. Priority, though, will be to migrate V1 stakers, but hopefully you'll be able to stake a bit of link if you are holding link. So keep an eye out for when that happens, because we will see some link staking happen in the not so distant future, which, as a new massive bag holder of link, I'm pretty excited about. So we'll watch to see how that plays out.